Crypto traders and investors use a variety of different tools and methods to analyze the market. For example, by the help of technical analysis, they use many price action concepts like trends or support and resistance levels, or they can use many indicators that are built based on price, volume, volatility, and momentum. And on the other hand, fundamental analysts analyze the market by the help of fundamental metrics like financial metrics, on-chain metrics, and project metrics. And for each of these categories, there are many metrics, indicators, and indexes. In today's video, we're going to talk about Crypto Fear and Greed Index, which is built based on 5 different factors, and it helps us to analyze and estimate the crypto market sentiment. Before we start and see how it works, please give this video a like, and if you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. Alright, first let's answer this question. What Crypto Fear and Greed Index is all about? As you probably know, that's the psychology of market participants that moves the prices up or down, and they mostly act on 2 psychological characteristics, which are fear and greed. When fear is prevalent in the market, the asset becomes oversold because everybody is selling in the fear of preventing more losses. And when greed is prevalent in the market, the asset becomes overbought because everybody is buying in the hope of making more profit. When this situation reaches to its extreme level, for example, when the market is in high degree of greed, meaning the asset is highly overbought, it's very likely for the asset to be rejected, and we may see decreasing of the price. And on the other hand, when the market is in high degree of fear, meaning the asset is highly oversold, it's very likely to see advancing of the price. The Crypto Fear and Greed Index works by estimating the market sentiment, which is represented by a score ranging from 0 to 100. The lower half of the range, 0 to 49, represents fear, and the higher half, 50 to 100, represents greed. Whenever the indicator reaches to an extreme level like 0 or 100, there is a high probability for the market to reverse its direction. To say more specifically, when the market reaches to 0, it means the market is too fearful, and when it reaches to 100, it indicates the market is too greedy, which these situations lead to the opposite effect. And when the index is remain at the rate of 50, the market is considered to be neutral. The Crypto Fear and Greed Index is actually based on CNN Fear and Greed Index, but this is for stock market. But in the Crypto Fear and Greed Index, the focus is on cryptocurrencies, and this index was created and hosted by alternative.me. There are also other websites using the data from this site, but in different formats, and there is also a Twitter page regularly updating the sentiment of the market. The Crypto Fear and Greed Index is built based on 5 different factors, and since altcoin prices are correlated to Bitcoin price, so this index bases its scores exclusively on market data that are related to Bitcoin. The types of data that is used in the calculation of Crypto Fear and Greed Index are volatility, market volume and momentum, social media, Bitcoin dominance, and Google Trends. Volatility accounts for 25% of the index, and it shows the pace at which the Bitcoin price changes. The market data from the last 30 days and 90 days are used in this index, and market volume and momentum accounts for another 25% of the index, and it shows both the average trading volume and market momentum for the past 30 and 90 days. Generally, high trading volume of the market is considered to increase greed, and social media accounts for 15% of the index. This data source at the moment is from Twitter. Actually, relevant crypto hashtags and engagement rates are collected from Twitter. Generally, if Twitter is quieter than usual and produces low engagement rates, this can show that the market is in a fear status. Bitcoin dominance accounts for 10% of the index, and it actually shows Bitcoin dominance in compared to the remaining crypto market. Increase in Bitcoin dominance indicates that the capital from altcoins are moving to Bitcoin. And Google Trends accounts for 10% of the index. Search queries related to Bitcoin and other relevant crypto keywords are collected from Google Trends to estimate market sentiment. Crypto Fear and Greed Index is generally suited for analyzing short-term to medium-term price predictions because of its volatility, and using this index for long-term price analysis is not recommended because this index changes rapidly and it's easily affected by different factors. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you haven't subscribed to my channel, please subscribe and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your investments.